Welcome to Make Your Money Matter with Brad Barrett, the show that aims to change the way you think about wealth management. Brad is a financial advisor, established radio host, and author of Retire Right. He is a managing director and partner at One Capital Management, an SEC-registered investment advisory firm managing over $4 billion for clients across the nation. Brad and his team are dedicated to helping clients protect and preserve their assets so they can reach their investment and retirement goals. And now, your host of Make Your Money Matter, Brad Barrett.
Welcome in to Make Your Money Matter. I'm your host, Brad Barrett. I'm also managing director and partner here at One Capital Management. And my goal on this show each and every week is to help you create a better relationship with your money and with your finances. And on this week's show, we're going to talk about life insurance. Now, before you skip to next and just, move off of this, hear me out, because I really want to focus on this, and I'm not going to sell you. I'm not going to have some morbid conversation about life insurance. But I was thinking last week when I was talking with a client that there are a lot of myths around life insurance that I want to essentially dispel today on the show. We're not going to go too much into the product types. We'll save that for another show. But I want you to really think about these, because I would likely bet that many of these myths you have thought, and there's 6 of them that I'm going to go through. But before we get started, make sure to go to our website at onecapital.com. You can click on the media tab there and you can download and subscribe to the Make Your Money Matter show. You can also download the podcast on any other platform, whether that's the Apple iTunes app on your phone, Google Podcasts, Spotify, or even SoundCloud. Do me a favor, leave us a message. It helps us get our message and our show out to more people each and every week. And with that, let's get started. So as I shared at the top of the show, I think there are many misconceptions floating around this world of ours when it comes to life insurance or buying life insurance. And now you might assume that life insurance is, let's say, extremely expensive, or maybe that you only need it when you get older, or so on and so forth. And we're going to talk about some of these things today, but I want to share something, because unlike things like car insurance, life insurance is not a legal requirement. It's discretionary. It's up to you to deem it worthy for you and your finances and your estate and your family, ultimately. And I think if you think about it from that aspect, many people are actually unaware of how valuable it might be or the benefits that come with it. So I wanted to talk about the other side of this, and I think some of the myths. So I think sometimes, and I would stay tuned here, because many of these you've likely thought about yourself. And as I go through these 6 myths, I want to start out with this, and I want you to at least hear it from somebody who's not trying to sell you insurance, because here at One Capital Management, as a financial advisor, insurance is one of the things we have to talk about as fiduciary advisors. We are not beholden to a certain company or anything like that, so we do not sell them from a specific area. We want to provide instead of sell. There's a big difference here. And here's what I mean by that. In my world, and how I think it should be done, this is an opinion, so a subjective matter, and you can discuss this with your advisor or reach out to us and we can go through it for you. But there's really 2 paths to start down when it comes to buying or needing life insurance. And the 2 that I want to talk about before we get into the myths are replacement of income or replacement of debt. Now, I think if you start there from a standpoint of, hey, if something were to happen to me, God forbid, I want to replace my income for a certain amount of years so that my family isn't impacted. And conversely, you can say, hey, if something were to happen to me, I want to make sure my debt, whatever, my mortgage, my auto loans, my debt that I have outstanding is covered so that I don't have to deplete, or my family doesn't have to deplete other assets to pay for them. And I truly believe, and I've seen it be successful, that if you start out with one of those 2 camps and talk with your advisor about which one matters to you most and your family, you're going down the right path. Obviously, you're going to get into conversations around permanent versus term. We'll talk about some of that today. And there's not a right answer or a one-size-fits-all here, okay? And I want to dispel some of the myths that come with that. Because again, as I shared, a lot of these you've probably thought of, and I want to, in a way, debunk some of these so that at least you're thinking about it clearly. Because I will say this. A couple things before I get started on the myths is, if you do insurance right, you only have to do it, or you should only need to do it once. And more to that point, I will say, if you don't shy away from it and you actually look at it, you yourself will find whether or not it's worthy for your family. If you don't look at it at all, how are you going to know? And so again, sometimes these concepts have bad brands, right? Things like life insurance has a bad brand. Things like an annuity has a bad brand. And here's the reason why, and this is my opinion, obviously, but it has to do with how they're sold, okay? There's been a lot of stories out there about sharks and naysayers and a bunch of guys who are selling things for commissions. I understand that. But just because there's some bad apples out there doesn't mean the product itself, or the solution, I should say, isn't right or shouldn't be considered for your estate. And so with that, I want to start out with myth number 1. And this myth I think is really important because it hits all of us, right? Is I'm not old enough to buy life insurance. Now, this has a lot to do with how you create an estate, or ultimately what insurance is really for, which is trying to protect something. And I think one of the biggest myths about life insurance is that you only need it when you're older. Now, in reality, as an advisor, there actually are many benefits to buying life insurance while you're young and while you're healthier. Life insurance in general is usually much cheaper when you're young, and things like term life insurance, you may be able to roll it over to a permanent coverage. There's a lot of different kinds of strategies like that when you're older. And so in general nature, when you think, oh, I'm not old enough to get it, I would actually argue and say the sooner you apply for a policy and take a look at it kind of as a proactive versus reactive standpoint, I think the more coverage you'll be able to afford. So something to consider. Now, myth number 2 is this, which dovetails right off number 1, right, is life insurance is expensive. Before I get into the notion of this, I think it's important to look at insurance in general, the one that can be used for you as an investment versus an expense. Now, I don't mean an investment that necessarily the return on investment is going to come to you. It's more to protect the investments that you are putting money into and you are going to be receiving as a benefit while living. Now, again, this misconception in my mind about life insurance is the price, right? And I think life insurance stats actually show that about 50% of people overestimate the cost of term life insurance. And there's like other types of insurance, the cost of life insurance, or something we call the COI, cost of insurance, is different for every individual and is actually based on factors like your age, your gender, and your overall health. Sometimes I share with my clients that going through a policy, when you do underwriting, which is what it's called, right? You're not signing into a policy, you're just actually applying for policy. And if nothing else happens, you get a free health check out of it. And that's how I kind of say it sometimes. And again, this gets into some of the notions as well, as there are many types, different types, I should say, of life insurance policies. And it may be easier than you think to find one that fits your budget. Now, I will say this, that be careful not to find something that's cheap now that you'll end up paying for later. Now, I'm not going to get into the specific types of insurance. I'm going to save that for another episode because I think it's a longer one. But suffice to say that just remember that when you think, oh, life insurance is expensive, we have to switch our mindsets a little bit to that it's an investment versus a cost, and then start with those 2 avenues I mentioned, replacement of income or replacement of debt, and go down that avenue, and where your mind and your rational thought process will start thinking about it a little bit differently, and you'll look at it as more of a protection investment than anything else. All right, myth number 3, and this is for all moms and dads out there who are stay-at-home. This myth that stay-at-home parents don't need life insurance. All right, let me just go through this real quickly, okay? Even if you are a stay-at-home parent, you and your beneficiaries may still benefit from life insurance, because I think it's important to consider the roles that you play that would otherwise cost your family money. Now, I always share with my clients that there's also a risk parameter in terms of the years, right? A young mother or a young father with younger kids might only need the coverage for 15, 20, 25 years, while what I'll call the lower probability but higher risk years. Meaning that when you're younger, the probability that you passing is lower, but the risk of you passing is higher. Now, what happens as you get older, if you think about it, right, your probability just by stats, men or women, right, just by stats, we become older and therefore getting closer to death, as they say. Every day we're getting closer and closer, right? I'm not trying to be morbid here, but just hear me out, okay? The fact of the matter is that the probability becomes higher, but the risk tends to become lower. Why? Because you're accumulating assets. The needs in this myth of stay-at-home parents becomes less because now your kids are maybe on their own, establishing their own lives. So the loss of you, right, won't cost the family dearly. So again, I think even if you're not bringing in a full-time income, your children and your spouse would likely be impacted financially if you were to unexpectedly pass away. So make sure to look at that.
Stay connected. Get frequent updates on the show. Follow Brad Barrett and Make Your Money Matter on most social media platforms. And catch full episodes of Make Your Money Matter streaming now on our YouTube channel. To schedule your no-obligation appointment, go to onecapital.com or call 805-410-5454.
Myth number 4, group life insurance. For those of you that are employed, and you have a group life insurance policy, we tend to think it's sufficient. And I'm not here to say that it's not, but many people, I think, get life insurance as part of their workplace benefits. Many of you listening probably are in this camp. But unlike your health or dental insurance, like what you're getting there, group life insurance through your employer is not necessarily sufficient for your family's needs. This is where you want to sit with an advisor and walk through what is right for you. Because additionally, think about it this way. If you quit your job, or maybe you're laid off, for example, which is, less likely for some, you will likely lose your group life insurance coverage. So most employers, think about it this way, base your group life insurance coverage on your salary. Now, based on how much financial support your family needs, your group life insurance may not be enough. Now, remember, that hits one of the camps I mentioned, right, which is replacement of income. But you don't just want 1 year replacement of income. That's not enough time. My rule of thumb is 5 to 10 years. So if you have $100,000 of income, you want somewhere between $500,000 and $1 million of coverage. Now, again, that's subjective. It's a rule of thumb. But what it does is it provides a tax-free lump sum to your family to get back on their feet. Because remember, the first year is going to be emotional, right? They're dealing with the loss. So the idea is making sure you have enough time to recover. So make sure you want to look at your group life insurance coverage along with some personal lines for yourself. Myth number 5, I don't need life insurance if I have personal savings. Now, I will say this, if you have personal savings or assets that are above your debt, or you are debt-free, you are likely in more of a camp where insurance might be lessened or not at all. I'm with you there. But saving money, well, I always should say this as an advisor, right? Saving money in general is a great financial habit. But even if you have a sizable emergency fund, lower debt, you may still benefit from life insurance, right? Generally speaking, it may not be wise to rely entirely on savings to support family members if you were to unexpectedly pass away. And here's the reasoning, right? Because even the biggest savings account can get drained in the event of a major life change or a cathartic event. Like, for instance, if you suffered a medical injury, a chunk of money in your savings account may go towards hospital bills, right? Leaving your account much smaller than it was before. This is where the insurance comes in. It really needs to be what I call fill the gap. Insurance investments are designed to fill the gap, and figure out what your gap is most important. And even in the event of your death, there may not be enough left over in the savings after something like this for your family members to maintain their current lifestyle. Now, with life insurance, obviously the death benefit is essentially locked up until you pass away in permanent policies. And it's guaranteed money in most circumstances, so you want to look at that, right? That your loved ones will have access to it. And you don't have to worry about spending it all before then. I have a lot of clients tell me that when they have insurance coverage, they feel more at ease in retirement in particular for them and their spouse to spend everything they've saved because they know their kids, who they would like to leave stuff to, will get some from the insurance. So it's a nice 1-2 punch of living retirement in abundance versus scarcity. Now, myth number 6, the final one I want to bring up, is that if I can't get life insurance if I have a pre-existing condition. Now, this one speaks more to the health conditions, and I am not a doctor by any means, but I want to speak to it for a second because I've seen this myth come up. Now, for most life insurance policies that I've dealt with, you will be expected to complete a medical exam before getting a quote or purchasing a policy. That is a very normal process. Now, the exam allows a life insurance company to assess your overall risk to them and calculate your premium by essentially identifying any potential health issues you may have. So for older applicants or those with pre-existing conditions, this can seem like a daunting process. However, I want to say this, you may have more options than you think. Now, there's a lot to digest in that statement. So again, this is where you want to seek counsel and just make sure you're not saying to yourself, oh, I can't get covered because of X, Y, or Z reasons. Make sure you know, and really the only way you know is by actually going through the process and taking a look. If your condition, for example, is minor, or you are actively managing the risk associated with, say, a medical condition, you will likely and may still be able to get coverage, just potentially at a slightly surcharged rate. This in the industry is called table rating. Now, obviously, there's different ratings, A, B, C, or D. And if you get into those camps, obviously, you want to look at that make sure that if the premium's too high, the investment doesn't make sense. But I still want you to, make sure everyone knows that before you just, go through this myth and just check it off like it's no way, it's important to take a look at it. It's worth your time, is what I'm saying. And for those out there, in the event that it's a major medical condition, you may still be able to get life insurance without a medical exam through things like guaranteed issue coverage. Again, talk with a good insurance producer or an advisor that's really looking at holistically, I do advise you finding someone that's unbiased and not necessarily beholden to a company. You want to feel in this camp, this investment you're going to be looking at, that you're really not being sold, you're being provided. That matters here, because your gut, if you're sitting with someone that's saying, I just feel like I'm being sold something, it's probably true. So again, when I talk about the notion of life insurance, there's certain topics as a financial advisor, when I talk about them, I know the stigma attached to it. So I want to share with you, as a seasoned advisor here, that just because it has a stigma doesn't mean it's not something you should look at. You just want to find the right person to look at it with, because speaking with someone that can do it right will identify the best policy type for anything, even this last myth of a pre-existing condition. And ultimately in future shows, we'll talk about the differences between permanent and term and which one is right, and how some philosophies. But I want to start off, this week, really just kind of put on your hearts that these myths that I was thinking about, I think are really important. They hit a lot of us, and likely many of us have actually thought about it. Hey, I want to thank you for listening to the Make Your Money Matter show. As always, before acting on anything discussed today, make sure to speak with a financial advisor near you about your specific situation. Or again, you can reach out to us at 805-410-5454 or on our website at onecapital.com. And until next time, always remember to make your money matter.
The information in this show is educational and general in nature and does not take into consideration a listener's personal circumstances. Therefore, it is not intended to be a substitute for specific individualized financial, legal, or tax advice. To determine which strategies or investments may be suitable for you, consult the appropriate qualified professional prior to making a final decision.